Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. COMEX futures have closed. Spot or Forex, of course, is still trading on the day, but we have a substantial gain in the market today with gold closing up almost $15 on the day, 1.34% gain at current bid of $10.92.90, the low $74.40, the high $94.90. So we're just a couple dollars off of the high. Now, in terms of the metals themselves, this particular metal, the precious yellow metal, did fare the best when we take a look at silver. Although that was trading higher this morning, it's trading up only about 4 cents, right at $14, the high $14.14 and the low $13.91 on the day. So traders, today's move, approximately $15 to the upside. Is it a significant move, and does it indicate a major trend reversal? First, is it significant? Absolutely. The fact that we have now traded above 1080 to me is absolutely significant. It is a critical point. You can see from this daily chart that I've just put up, the 78% retracement area, which could correspond to, of course, the 23% retracement level, depending on which side you're beginning on. And you can see that as this market came down in August, this is where it found support, roughly in the 1080 area. It comes back up, and then the next level, of course, and we've identified both of these levels before, comes in at about 1103, roughly in that area. So you can see that we've got good support here. It's a good supportive area here. And then as the market broke hard, of course, from this 1191 down to these historical lows. These are lows that we had not seen since the market had moved to $1,900 per ounce. So they're a new low from the former high, of course. As the market came up, there was absolutely no doubt in that what we were looking at as it tried to really trade above a certain area, that it tended to stall right here. And this price point was absolutely an area of resistance. You can see it on a number of candles. As we talked about yesterday, you had a couple of occasions where it attempted to break above, but not significantly. You did have it on a closing basis here and a closing basis here, but it was not to be sustained by any stretch of the imagination. That's not the case today. Today we've got a substantial move up, and this move up itself, I believe, is significant. Now, I believe our next real level of resistance is not going to come in till about 1102. And depending upon if it goes to this point and how it reacts at this point would determine the next real level that we would look at. Of course, 1136 becomes that level. Now, my sense is right now that we have a market that has really created that safe, we have an environment, that has really created that safe haven need out there. We have geopolitical hotspots all over the world. The news of North Korea announcing that they have set off a hydrogen bomb. And we do have turmoil in the world. Absolutely no doubt. My sense is that when we look at this market in the way that it is, whether or not we'll see a sustained move is yet another thing that is to be determined. But we certainly today have seen this move above this particular price point, which to me convinces me that we did in fact see some sort of a bottom in the marketplace and strong support in terms of the area of about, call it 1050. So the real question is whether or not 1080 will become that former resistance, but it could in fact absolutely become a supportive area at this point, and that's what we want to look at. Traders that are looking to get long, my only real hesitation in pulling the trigger is getting along at 91 and then seeing the market stall $8 later at 1100 only to move back down. This is significant. There's absolutely no doubt about it. It is a sustained move because we have now seen really 4 days in a row of higher pricing as this market moved up, first of all. Second of all, when we look at the straight pattern, and let me go ahead and kind of blow this up, but when we look at the straight candlestick pattern that was created in today's market move, what you get really is, first of all, market defined downtrend. You get a 3-river morning star. That would be these 3 candles here. You do get your confirmation. This would be yesterday's candle. And today you absolutely have this market run away. So we certainly have the criteria that we have now gone into at least a short-term uptrend in the market. I'm not convinced we have a key reversal. And what I mean by that is moving from a bear market to a bull market. I'd have to see it really trade above 1130 for that. But I can tell you this. We can look to trade this market, and if you're going to trade this market, your stop is going to be underneath 1080. You'd enter at the market, but you really want to be careful about how it reacts if in fact it continues to move higher, as high as 1100, because our next real level of resistance comes in roughly at 1103. And traders, lastly, I do want to take a look at gold through a daily chart, but this time through a Japanese average, a Heikin Ashi chart, which is what we pulled up. And here is what I am seeing. If we take a look at the last 3 trading days, over the last 2 of those trading days, meaning today as well as yesterday, we have lost the lower wick. Very, very strong statement in terms of a Heikin Ashi chart. Secondly, candle size is good, and when we compare it to the recent activity since we have broken below a 1080, there has never been a point in which we have 3 consecutive days in which we have the last 2 not having any kind of a lower wick. Here you have 2, but you don't have a 3-day consecutive move. So this is the first time we've had 3 consecutive up days in terms of a Heikin Ashi for, when we look at the candlesticks, a break and close above 1080. So there can be absolutely no doubt that we have had a firm breakout of the market. As I said, our only caveat right now is our next real level of resistance comes in just about $9-10 from here, and that's what makes me hesitant about pulling the trigger at this point. But as I said, there is a strategy which I did give to you earlier in the report, where to put your stop and where to be cautious of. But this absolutely is significant, but we're still a little bit of ways from saying we've seen a major trend reversal. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.